In this video, we'll be taking a look at future analysis to get prepared for the week ahead. If you love the content, please like, subscribe, and leave your thoughts in the comment section down below. And if you're interested in learning to trade first like professional, check out our complete Forex trading course on Udemy. I have the link attached in the description below as well. So without further ado, we'll be talking about gold, crude oil, Nasdaq, GBP-USD, and EUR-USD. So whichever chart you find interesting, you can use the timestamp below to navigate through the video. So we're starting with the gold chart on the 2 hours time frame. Finally, we had a very solid bullish breakout from the symmetrical triangle we've been talking about for a while now, and you can see multiple touches over here at the upper bounds of the symmetrical triangle and over here. So last week we anticipated a bullish move and a breakout from the symmetrical triangle, and that has happened. Right now there's only one probable course of action, and that will be looking for opportunities to go long. And my bullish case scenario will be waiting for a consolidation around this area of value, followed by a good bullish breakout. So this would simply signify a bullish continuation pattern, right? So it may be a small symmetrical triangle, it may be a bullish flag, it may be a descending wedge, it may be a channel, whichever chart pattern that consolidation takes. As far as we get a bullish breakout from that pattern in continuation of this move to the upside, that would be your confirmation to go long. So entry will be after the breakout from that consolidation. Stop loss will be placed underneath the consolidation that leads to the breakout, and you can trade your positions as you go higher. First take profit targets could be placed here, which will lead to us being in price discovery. Then you have to trade your positions as you go higher to safeguard those profits as the price action evolves, right? So another case study to watch out for would be a possible retest. So there's a good chance we also get a retest of this symmetrical triangle or this area of value over here, followed by a move to the upside. Very good possibility. If this happens, then you want to get into this trade immediately after the bounce of this area of value when you get your confirmation, depending on what you're watching out for, right? Stop loss will be placed underneath that retest. Take profit target, first one as usual, can be placed around these highs. Then you trade the rest of your positions as you go higher. That's it briefly for gold in this video, because I don't see any reason why you want to go short right now. The market is clearly giving us a signal that the bulls have returned, the bulls are in charge, and I can see a clear possibility that gold is going to run higher all the way to $3,500 per ounce of gold, as the case may be. That's it briefly for gold setup. If you have questions, please leave them in the comment section down below. Moving on, we're talking about crude oil. So crude oil, this is a no-brainer for me. In my opinion, I think we're going lower. I've been talking about how bearish I've been on crude oil for a while now. And last week, we talked about the possibility of price moving into this area of value, and that happened exactly as we expected. So you can see this massive move into the area of value, followed by a good rejection. Now we seem to be consolidating, and this looks like a bearish continuation pattern. So massive move to the downside, a retest of this breakout, now a reversal and a consolidation. So the best course of action will be watching out for a bearish breakout, and you can see this dotted line here. So this is my alert for when we break through this trend line, right, in continuation of the move to the downside. So if this happens, your entry is going to be placed after we break out from this current consolidation, or you could put it around these lows, right, underneath these lows if you feel safer that way. But I think a clean breakthrough trend line should suffice, and your stop loss will be placed above these highs. So if this breakout happens, then technically, if price was to go through these highs to hit your stop loss, then it means we're probably going to be looking at a break from this trend line, which would technically invalidate this current setup, right? So that's why entry will be placed here, stop loss above these highs, and take profit should be placed around this area of values, which will give you a risk to reward ratio of, let's see, so entry here to stop loss here, 140 pips stop loss to approximately 300 to 400 pips take profit target. So let's say 360 pips take profit. That's a risk to reward ratio of 1 to 2 or 1 to 2.5, which looks and sounds decent in my opinion. So if you're interested in trading crude oil, this is what I'll be watching out for crude oil, right? For a bullish case scenario, I'm not bullish right now, but things could change rapidly if we do see price taking out this area of value and also this trend line, which there's a good possibility that this happens, right, then this would become a bullish setup. In that case, next weekend we'll review again and see how we can take advantage of that setup. That's briefly for crude oil. If you have questions, leave them in the comment section down below. Moving on, we're talking about Nasdaq. So I haven't talked about Nasdaq for a while now, but this looks like a clean trade opportunity in my opinion. We have a clean area of value over here, another one here. We have this dotted line, which is my alert to notify me when price gets there, and we can see some sort of a symmetrical triangle, right? So one low here, two lows, and we can see these highs sloping down to the downside, right? Sloping downwards, excuse me. So what I'm watching out for is a bit of a move into this lower bounce of the symmetrical triangle, then see if we do get a bounce. My bullish case scenario would be waiting to see if we get a bounce and a move to the upside. So the best price level to go long for confirmed bullish movement will be waiting for something like this. This would be the best conservative price level to go long, a breakout from this symmetrical triangle. So if this happens, your entry want to be above the breakout. Stop loss can then be placed underneath the consolidation listed breakout. First take profit target can be around these highs while you trade the rest of your positions as we go higher. This is my conservative bullish case scenario for Nasdaq, right? So if you want to go more aggressive, I'm going to show you something on the 6 hours time frame. So if you go to the 6 hours time frame, for example, for a more aggressive approach to go long, you can pull up the moving average on the 6 hours time frame. You can see we have the 200 EMA and SMA, which gives us a nice clean area of support. You can see price has been trading above this area, moving average since May, right? Since May this year. And your conservative, your aggressive approach to go long on Nasdaq would be waiting for price to see if price dumps into this moving average, then bounces up, which will give you an opportunity to go long. So if this happens, then you can clearly go long here. Your stop loss will be placed underneath the moving average, which corresponds to, beneath this area of value here. Then you can trade your positions to go higher. First take profit target could be as high as this highs or the higher bounce of this symmetrical triangle. Second one could be around this place where you trade the rest of positions as you go higher. This would be the most aggressive approach, and the reason why it's enticing is because it's going to give you a tighter risk to reward ratio, right? So with this one, so going aggressive like this would mean a potential stop loss of approximately 200 pips, while your take profit target can go as high as 800 to 1000 pips. So that's a risk to reward ratio of 1 to 5, possibly 1 to 10 if you decide to hold the trade longer. So I do think this is the approach I'm going to be taking. If this happens, I'm going to go long here. If it doesn't happen, let's say we get a movement that gets short-lived, so excuse me. So if this movement gets short-lived, let's say we get a bounce off of this place without getting to the moving average, then I won't rush into going long. I'm just going to wait for that consolidation over here. Then after a breakout, I go long. So this will be taking the conservative approach, but I'm going to go aggressive if we do see a price dump into this area of value, followed by a bounce. Then I'm going to take that risk, go long, and hold my positions as we go higher. It's going to be a no-brainer. Just watch out for this. And if you're watching out for this aggressive approach, then you shouldn't be fooled by the lower bounds of the symmetrical triangle, because it may seem, so let's say if we come into the symmetrical triangle, it may seem like, let's say we get another consolidation, we get a breakout, right? It may seem like we are going all the way low to this area of value, right? So if we get a breakout from this symmetrical triangle, moving average on the 6 hours time frame is something to pay attention to. So be cautious, be careful, so you don't get carried away by going short, right? Just to get your trade short-lived by the moving average and the bounce to the upside. Something to pay attention to. So that's briefly for Nasdaq, and if you have questions, please leave them in the comment section down below. If you agree with me or disagree with me, also leave them in the comment section down below. Now, just because I said this doesn't mean price can't come into this area of value. There's a good chance price breaks through that symmetrical triangle at this line, comes into this moving average, consolidates here, and even go lower. There's a good chance this happens, right? So trading is all about probability and where you are willing to, place your bets or place your risks, right? But from what I've gathered, this Nasdaq right now has been on a bullish trend We just got a green light from the Feds that they're likely going to start, cutting rates from September, which is starting tomorrow. So everything's kind of aligned towards a bullish case scenario, right? Rather than us going lower all the way to these lows, which is a possibility. But firstly, when we get to this moving average, I'm going to take the risk to go long with tight stop loss. If we do lose this area of value, then I'm going to reevaluate and possibly maybe go short, aiming for this lows, this area of value. So that's it. It's all about probability and where you are going to bank on. So for now, I'm banking on a trend and a moving average. If that fails, then I'm going to look for other areas to, place my positions and take advantage of the price action as the market evolves. That's briefly for Nasdaq. Moving on, talking about GBP-USD. So GBP-USD, we discussed this last week and we talked about the possibility of price taking out this area of resistance. It hasn't happened yet, but I think it's still going to happen. I'm still bullish on GBP-USD because the DXY looks bearish. I'm going to wait for a price increase into this area of value, a small consolidation followed by a good breakout. If this happens, this should be your entry. So your entry should be placed above the breakout. Stop loss underneath the consolidation list of the breakout. Take profit target first one over here, and you trade the rest as you go higher. Remember, I don't trade currency pairs, at least not for now. I'm going to be focusing on gold, crude oil, and Nasdaq. If I'm right on those three charts, then I'm going to make a lot of money where I don't need to, take too much risk trading currency pairs, which can be messy sometimes. So this is briefly for my GBP-USD setup. Also, let me know in the comment section below if you agree or disagree with me. I don't think I have a bearish case scenario. So if you want to go bearish, that would mean, taking these lows, for example, and watching out for something like this and a breakout. But it doesn't look realistic, in my opinion, for now, because DXY is weak. There's a good chance the dollar drops this month, which would mean GBP-USD going higher. And you do not want to trade against the trend because GBP-USD clearly right now still in a massive bullish trend, right? And you want to be in the direction of the trend. So that's briefly for GBP-USD. And lastly, we're talking about EUR-USD. So similar chart to GBP-USD, bullish trend, tracking the DXY quite nicely. We've had this huge, massive consolidation, and I think there's a good chance we get a bullish breakout to the upside. So that bullish breakout will come in form of a consolidation over here, something like this, followed by a bullish breakout to the upside. So we may get a consolidation, we may not get a consolidation. So whatever happens, the plan or the idea is taking a trade when we break through this trend line, right? So this trend line is currently acting as a sloping area of resistance, holding price and preventing price from going higher. So if we get a consolidation, which will give you a tighter risk to reward ratio, then your entry can be placed after the breakout from this trend line. Stop loss placed underneath the consolidation while you trail your positions as we go higher. First take profit target could be here, but I wouldn't be taking profits around this highs if I was going to trade this. I'm just going to hold my positions as we go higher and see where the market leads. That's it briefly for this week's analysis. If you love the content, please like, subscribe, leave your thoughts in the comment section down below. If you're interested in learning to trade Forex like professional, check out our complete Forex trading course on Udemy. I have the link attached in the description below as well. That's it from me, guys, this week. If anything changes, we're going to discuss all that next week. That's it from me, guys. Do have a lovely week ahead. See you next week.